Imagine this. You wake up one morning, go to your favorite coffee shop, and order the same drink you've been buying for years. But today, the price has doubled. At first, you think it's just this one store. But then you fill up your gas tank, and the price per gallon has skyrocketed. You check your grocery bill. Your essentials now cost twice what they did last year. Your paycheck hasn't changed. But suddenly, your money buys you less. This isn't some distant, hypothetical scenario. This is inflation. And it's happening right now. But here's the real question. How do you protect yourself? How do you stop inflation from eroding your savings, your income, and your financial future? Ray Dalio, one of the world's most successful hedge fund managers, has spent decades studying economic cycles and inflation. His advice? Inflation is inevitable, but how you prepare determines whether you survive or suffer. Dalio isn't alone. Experts like Warren Buffett, Michael Burry, and other financial minds have already positioned themselves to profit from inflation while the rest of the world struggles. So how do they do it? How can you protect your money, your investments, and your future from the silent thief that is inflation? Let's break it down. The hidden tax. Why inflation steals your wealth without you noticing. Most people think inflation is just about higher prices. But the truth is much worse. Inflation is a silent tax, a slow, invisible erosion of your wealth that most people don't even realize is happening. Governments print more money. Central banks flood the system with liquidity. At first, everything seems fine. But slowly, almost unnoticeably, your dollars become worth less and less. It's not that prices are rising. It's that your money is losing value. If you kept $10,000 in a savings account in 2000, it still says $10,000 today. But what that money can buy? Cut in half. And here's the worst part, inflation compounds. That coffee that costs $5 today? If inflation runs at 10% a year, it won't just be $5.50 next year, it'll be over $10 in just a few years. This is how wealth evaporates. Slowly, then all at once. So, what do experts like Ray Dalio, Warren Buffett, and others do differently? They don't sit on cash. They don't wait for inflation to destroy their savings. Instead, they shift their money into assets that grow faster than inflation. Because if your money isn't working for you, it's dying. The cash trap. Why holding too much money is the worst move during inflation? Most people believe that saving money is smart. That cash is safe. But in times of high inflation, cash is actually the riskiest asset you can hold. Think about it. If inflation is at 8%, and your savings account pays you 0.5% interest, you're actually losing 7.5% of your money's value every year. Ray Dalio calls cash trash during inflationary periods, because while it might feel safe, it's quietly being destroyed. This is why smart investors move out of cash and into assets that increase in value over time. Because if your money isn't growing, it's shrinking. We've already uncovered the harsh reality. Inflation is eroding your money every single day. If you're holding cash, you're losing purchasing power. If your salary isn't keeping up, you're getting poorer without even realizing it. The rich? They don't just sit back and watch their money disappear. They move fast. They position themselves in assets that don't just survive inflation, they thrive during it. And the best part? You can do the same. Ray Dalio, Warren Buffett, and other top investors have already placed their bets. So where is their money going? If you want to beat inflation, here's what you need to know. The best inflation-proof assets. Where the rich put their money. The biggest mistake you can make right now. Leaving all your money in cash. Smart investors don't just hold onto money. They own things that grow in value over time. These are the assets that historically outperform inflation. Hard assets. The first line of defense against inflation. One of the most powerful ways to protect yourself from inflation? Own real things. When currencies lose value, physical assets retain purchasing power. House real estate. Property prices rise with inflation, and rental income increases over time. If inflation soars, so do housing prices. That's why the wealthy buy real estate during inflationary periods. Oil drum commodities, energy prices, food, and raw materials always increase in value when inflation runs high. Owning investments in commodities like oil, wheat, or industrial metals can protect your portfolio from currency devaluation. First place metal gold and silver. Gold has been a store of value for thousands of years. When inflation spikes, people rush to gold because it holds purchasing power while paper money loses value. Rocket cryptocurrency? Some believe Bitcoin is digital gold, a way to hedge against inflation. But is it truly a safe store of value? That's still debated, but major investors are already diversifying into digital assets. Hard assets aren't just investments, they're shields against a weakening currency. But they're not the only defense. There's another category of assets that actually benefit from inflation. Stocks and businesses. The secret to beating inflation. Ray Dalio, Warren Buffett, and the biggest investors in the world don't just protect their wealth during inflation, they grow it. They do this by owning pieces of companies that can increase prices and generate profits even as inflation rises. Upward trend stocks in strong industries. Not all stocks are good during inflation, but some thrive. Small diamond consumer staples. Companies selling food, healthcare, and basic goods can pass rising costs to consumers. Small diamond energy and natural resources. Oil companies, mining firms, and industrial suppliers rise when inflation spikes. Small diamond tech and innovation. Some companies create massive value that outpaces inflation, even in tough economic times. Bar graph. Owning a business. One of the best inflation defenses is having your own business or owning shares in businesses. Why? Because when costs rise, businesses that can raise their prices keep making money. This is why the world's richest people own assets, not just income. Debt. The hidden weapon of the wealthy. Here's something most people don't realize. Debt can be a secret weapon against inflation. Sounds crazy, right? But here's how the rich use debt to turn inflation into an advantage. Dollar note fixed rate debt becomes cheaper over time. If you take out a mortgage at 3% interest, and inflation is running at 8%, you're essentially borrowing money at negative real interest rates. Upward trend. Property owners benefit from inflation. Rents increase, but the debt payments stay the same, meaning the real value of debt decreases over time. While the poor and middle class fear debt, the rich use it strategically to build wealth while inflation destroys regular savings. The key? Smart leverage, not reckless borrowing. What not to do? The biggest mistakes during inflation. Now that we know what to do, let's talk about the biggest mistakes people make during inflation. Crossmark. Holding too much cash. If your money isn't growing, it's losing value. Crossmark. Buying depreciating assets, fancy cars, luxury goods, and things that don't generate income. They get hit the hardest by inflation. Crossmark. Ignoring investments. Sitting on the sidelines while inflation runs wild is one of the most dangerous moves you can make. Crossmark. Not adjusting your income strategy. If you're relying on a paycheck that isn't growing, you're losing purchasing power every year. Inflation punishes those who don't act. But those who prepare, they come out ahead. What's next? Is a financial collapse coming? We've seen inflation rise and fall before. But what's coming next? Are we heading toward a full-blown economic collapse? A total monetary reset? We've already uncovered the brutal truth. Inflation is not just rising prices, it's the silent destruction of your wealth. We've seen how cash is a trap, how the rich move their money into assets that outpace inflation, and how smart investors like Ray Dalio and Warren Buffett position themselves before crises hit. But here's the biggest question of all: what happens next? Are we heading toward a full-blown economic collapse? A recession? A total financial reset? What do the world's top investors see coming, and more importantly, how can you stay ahead while everyone else struggles? This is the final piece of the puzzle. This is how you prepare for what's coming next. The next financial crisis. Are we already in it? Ray Dalio has spent decades analyzing economic cycles. His research shows that inflation isn't random, it's part of a predictable pattern. Governments print money to solve problems. That money floods the system, making people feel richer. Then prices rise, debt piles up, and inflation spirals out of control. To stop inflation, central banks raise interest rates. And eventually, it all comes crashing down. This has happened over and over throughout history. Downward trend: the Great Depression, 1929. A boom fueled by easy money and debt led to one of the worst crashes in history. Downward trend: the 1970s inflation crisis. The government printed money, inflation skyrocketed, and interest rates were raised to 20% just to control it. Downward trend: the 2008 financial crash. Excessive borrowing and a bubble in real estate collapsed the banking system overnight. Downward trend: the 2020-2023 inflation surge. Trillions of dollars printed during the pandemic created the biggest inflation spike in decades. And now? We're at a breaking point. Governments have two choices. Keycap 1: print even more money and risk hyperinflation. Keycap 2: raise interest rates and crash the economy. Neither choice is good. But one thing is certain: if you're not preparing, you're at risk. The collapse of trust. When confidence in money fades, money isn't backed by gold anymore. It's not backed by anything except trust. The only reason money has value is because people believe it does. But what happens when trust disappears? We've seen it before. Bank in Venezuela, inflation hit 1,000,000%. People abandoned their own currency. Bank in Zimbabwe, inflation became so bad that a loaf of bread cost billions of dollars. Bank in Argentina, savings accounts were frozen overnight, and people lost everything. This isn't just history. It's a warning. When inflation runs too high, people stop trusting their currency. And when that happens, money loses its power. This is why the rich don't just sit on cash, they own assets, businesses, land, and investments that can't be devalued overnight. Because if your wealth is only numbers on a screen, it can be wiped out in an instant. What you can do to stay ahead: by now, you understand the risks. You see what's coming. But the most important question is, what can you do right now to protect yourself? Checkmark: own inflation-proof assets, stocks in strong industries, real estate, commodities, and businesses that can raise prices when inflation rises. Checkmark: diversify your wealth. Don't keep everything in one place. Spread your assets across different investments, different industries, and even different countries. Checkmark: avoid the cash trap. If inflation is 8% and your savings account earns 1%, you're losing money every year. Keep only what you need for short-term expenses. Checkmark: increase your income streams. Wages rarely keep up with inflation. The best way to beat rising costs? Create multiple income sources, side businesses, freelancing, investments. Checkmark: use smart debt. While bad debt, credit cards, high interest loans, destroys wealth, low interest debt, like mortgages on appreciating assets, benefits you during inflation. Checkmark: stay ahead of economic shifts. Inflation doesn't happen in a straight line. Recessions follow. Market crashes follow. The ones who prepare before it happens come out on top. The worst thing you can do? Ignore what's coming and assume everything will be fine. The final thought: are you ready? Ray Dalio and the greatest investors in history don't panic during inflation. They prepare. They understand that economic cycles repeat, that inflation is a game that only the smart survive, and that the key to protecting wealth is knowing where to position yourself before it's too late. The question is, will you act? Because the people who understand inflation and take action will emerge stronger. And those who don't, they'll watch their wealth disappear, $1 at a time. The choice is yours. Fire if you found this video eye-opening. Hit like and subscribe for more deep financial insights. Speech balloon: what do you think is coming next? Recession, more inflation, or something even worse? Let's discuss in the comments. Loudspeaker: turn on notifications so you never miss an update on the financial world.